So I was hoping to talk to you mainly today about what we do in terms of investment, and some people might have liked to learn more about how to present the best business case and to win the support from investors. I'll do that in a different way. But I thought, given what's happening right now in the Canadian ecosystem, and especially in the light of the last budget, that I should also entertain you about what is the fund, what have we done so far. And I'm glad, Michel, you've raised the point that, we were supported 30 years ago. This is the 30th year of the Fonds de Solidarité. So I'd like to take a bit of retrospect and look what we've done and then talk about the future. Now I would like to give you a bit of a background on our fund of funds strategy. And I will start with my best slide. It's a nice pizza, the many pizzas that we have. Why it looks so complex? It's because it is the ecosystem. That's what we've done in the last 15 years. We've built a portfolio of funds that are directly addressing the needs of the entrepreneurs. In the blue circle are all of the funds that we've invested in that are dealing with IT telecom. The kind of yellow circle, it should be yellow, on the left-hand side are the life science funds that we've invested in, and finally the clean tech sector that we've kind of invested in initially. We were coming back now investing in that sector as well, and tech being a new partner that we're dealing with in one specific case. So I think it was important, and I could, if some people want to have a look at it, I have the same slide but printed copy, so maybe if you want to look at the exact names and numbers, I'd be happy to share that with you. But just to give you a sense of exactly how we've structured our approach now. And so instead of doing only direct investments and sometimes picking the winners and losers from our perspective, we're working now with specialists, people who can make those calls and be better at it. And that's how companies like Beyond Direct, for example, has been able to get some financing, the early financing, the growth capital, through some of the funds that we are partners with. And then we will also co-invest. Whenever a company has been successful, then we would be there. The fund would be there. And this is what we've done with a company. Recently, we've invested together with other funds in Distech. Distech is an HVAC company specialized in home ventilation, and they are definitely a clean tech type of company. So we came in, we led a round of $40 million. Inetech was involved, our friends from EDC as well, and the Caisse de Dépôt. So we're really working together to really build those companies. And this is not considered from a Thomson Reuters perspective. This is not considered as a VC investment. It is a growth investment. So it doesn't show up on the statistics, but we invested $14.5 million in that company. We did the same with Lumen Pulse. Lumen Pulse is a nice company in Montreal that's growing. We invested $3.3 million in that company. It's not seen as venture capital, but it is venture because the company is growing. It's at its expansion phase. So this is just to give you examples of how the nature of the business is. And this is also the ecosystem that has given birth to Radiant 6, one of the biggest recent success in Canada and out of Fredericton. Innovia is also a good example. The fund was involved in the early days. We worked with our with our venture partners. The most recent one was a US-based fund. Finally, we sold this company for more than $1 billion. And also the fund was behind Biochem. Some of you, the older members of this crowd might recall that it was one of the biggest success, a huge return that it provided to the fund. So this is how we see the ecosystem working together. So the way we've structured our investment, and sorry, it's very small, but I just wanted to show you how it's being dispersed in terms of the initial inception phase, the growth phase, and the what we call the seed phase in the initial rounds, and also how we're dispersed between investment in Quebec, Canada, and abroad. So it's a mix, it's a combination of the different expertise at the early stage, so working with the Amorcam of the world, the Cycle Capital, 683, Real Venture, and then moving on with the other funds, the RO of the world, the Inovia of the world, and finally the Tandem expansion and those funds. So this is how we ensure that there is no gap in the financing continuum. That's how I presented this in Boston, I recall, last year. I mean, this is where we see our role. Whenever there's a gap, we need to make sure that someone is there to fill that gap. And there is no traversée du désert, this what we used to see sometimes when there's a focus, there's too much money on one end of the spectrum and not enough on the other end. We feel this is our role to make sure that we fill those gaps. Boston, and we'll get that one. There's a comeback. It's definitely, we think that the worst years are behind us in life science right now, but what's nice about it is that, when people said that the model doesn't work anymore in Quebec, we've never left the industry, the life science. The fund has always been there. In some the good years, probably close to 70% of all these done in biotech, the fund was involved. We are still involved. And now we see a comeback of the pharmas. The Merck of the world, the Glaxo of the world, the Eli Lilly. We've created funds with these guys, and they want to invest not only through these funds, but also directly. So there is a comeback, and it's very interesting. I think it's going to look good for the life science sector in Quebec and in Canada. So and this is the result of the fact that we were there, we stayed there, and we're staying present when it comes time to support that industry. So I think it's a very important point to make. So I wanted to leave it with you. So, but sometimes we have to deal with perception and reality. There's a study that was made by the CDR Institute, and I don't want to pinpoint directly at the journalist who wrote this article, but he drafted his article based on this study. It's a study that tries to make the relationship between innovation in terms of new patents being created and the investment in venture capital. When you look at the way the numbers were structured, they call it, in fact, the labor or the retail funds in Canada, labor-sponsored funds. We are a separate category. So we have the institutional investors on top, and now the research shows that they're very good at it. Apparently, the government makes better calls using government and institutions than the VC or the labor funds would do. The problem with that is that it's not the right statistics. Because if you look at the way we're doing our investments, we shouldn't be in the category only, a separate category of labor funds. We're dispersed now dealing with the institutional investors like government and BDC and EDC. So the statistic is wrong, but it leads you to articles like this one. And I just want to, I'll leave you to the conclusion. But do you think that it is a fair statement to say that the labor funds are not doing a good job at financing innovation? If you go back to the pizza I showed you before, the statement is quite the contrary. And I think we've been able to support that industry a different way. Canada is different than the United States. We have an ecosystem of our own. It's a different way. We have to work together. So I would prefer to see us working hand in hand in the government, looking at the future than looking backwards. And I would trust that we can count on your support on that front. We're definitely hoping to have good discussions with the government. But so far, we haven't been invited to be at the table. So I left on the table in a petition because we want to have support of the industry, as many people as possible. So I left it at the main table at the entrance. If some of you want to express their support for the industry, for us as a good partner in this ecosystem, I would thank you very much. And on that, I'll leave you to, if you have any questions. Do you have questions? Or?
Do you have Alexandre Lorrain's Twitter account?
I'm not targeting Alexandre per se, because one article I would like to lead you to, though, is this study that was released by our friends at McRock Capital. And it's fairly interesting what they bring is they refer to the bad calls that were made in the past. And one of them was the AVRO program, if you recall, but under the Diefenbaker government, they've scrapped a very good program that would have taken Canada at the forefront of the aerospace industry, but it was cancelled, and for the reasons that some of you might know better than I do, but I have no clue what led to the decision. But also with the fact that when Nortel was gone, it created a big hole, and we didn't fill that hole. And I think it's our responsibility for us and for our children to make sure that we're going to fill that gap. So that was in a nutshell, my last statement. I wanted to leave you on that. It shows the decrease. This is Ontario. The percentage of capped assets in this category, in this class of assets, the decrease since the government of Ontario has decided to drop the tax credit in the province. So you see the decrease over 5 years and the increase that we've seen in Quebec with the introduction of the new funds that we introduced with their list as well. So the impact is immediate. It makes a huge difference. Thank you. Yeah.
So thank you very much, Alain. And it's very important to understand all the impact and aspect of the venture capital industry. So it gave a very good light about what is happening right now.